Quick question. How many times have you submitted your Aadhaar and PAN card for KYC? Once for your bank account, again for your mutual fund, again for your demat account, again for that new insurance policy. Same documents, same information, 5 different times. That's about to change. India is rolling out CKYC 2.0, and starting August 2026, one KYC record could work across every bank, insurer, mutual fund, and financial institution in the country. I am Raja. In this video, what CKYC 2.0 actually is and how you can pull up your own 14-digit KYC number in under 2 minutes. A central KYC registry has actually existed since 2016. Same idea, one record, reusable everywhere. But it quietly became unreliable over time. Duplicate entries, mismatched records, outdated details. So banks stopped trusting it and went back to asking for fresh documents every time. CKYC 2.0 is built to fix exactly that trust problem. Here's how. CKYC 2.0 is a full technical overhaul expected to roll out from around August 1st, 2026. Banks and insurers first, mutual funds and brokers joining in phases after. 1. Real-time APIs instead of batch uploads. Today, an address update can take days or weeks to reflect in the registry, if it reflects at all. Under 2.0, it happens through a live API call, near instant, and pushed to every connected institution. 2. A 14-digit KIN, your KYC identification number. Instead of re-uploading documents at a new bank, you just share this number. 3. A confidence score on every record. This is the direct fix for the old trust problem. Each record now carries a score reflecting how reliable and well verified it is. For instance, a record backed by in-person verification scores higher than a basic online upload. This is what's supposed to make banks actually trust the registry again. 4. OTP based consent. No institution can pull your data silently. You get a specific request, usually by OTP, every single time. You approve it, they get it. No approval, no access. 5. DigiLocker integration and AI assisted deduplication. So those old triplicate, mismatched records finally get identified and merged. Say you want to open a mutual fund account with a new AMC. You share your PAN or your 14-digit KIN. Their system searches the registry. If a verified record exists, you get an OTP consent request. Do you authorize Fund House to access your CKYC record? You approve it, and they instantly pull your verified identity, address, and photo. Account opened. No fresh document upload. No video KYC call. One nuance. Consent is at the institution level, not field by field. You can't currently share your address but withhold your photo. That kind of granular control may come later, but isn't part of this rollout. You don't have to wait for August. If you've done KYC with any bank, broker, or insurer after 2017, you likely already have a CKYC number sitting in the registry right now. Here's how to find it. Missed call method, the fastest. From your registered mobile number, give a missed call to 7799 022 129. You'll get an SMS back with a link to your CKYC card containing your 14-digit number. Official portal. Go to CKYCindia.in. Use the View Your CKYC card option, verify your mobile number, and your details load up. Through DigiLocker or by simply asking your bank, they can pull it up after verifying your identity and help you update anything that's outdated. Quick note. Always double check you're on the official CER SAI channels before entering any personal details. That missed call number and CKYCindia.in are the real ones. Don't trust random links claiming to be CKYC portals. Here's why this actually matters beyond just convenience. By some estimates, close to 90% of Indian adults now have a bank account, but only around 10% hold mutual funds or insurance. That's a massive gap, and a lot of it comes down to friction. People in smaller cities and towns want to invest but get scared off by repetitive paperwork and slow onboarding. CKYC 2.0 is aimed squarely at that gap. Faster onboarding, minutes instead of days once you're already verified anywhere, fewer duplicate or mismatched records thanks to AI assisted deduplication. Real time updates that, in theory, propagate across institutions fast. Better fraud visibility since every access now leaves a consent trail. For NRIs, this is especially useful. No more couriering physical documents every time you engage with an Indian financial institution from abroad. Let's stay balanced. This isn't a magic fix. Rollout friction is normal. Expect some early hiccups, consent prompts that don't load, requests that time out, not automatically a sign of fraud. Retry later or use the institution's own app. It's phased. Banks and insurers first. Mutual funds and brokers follow later in 2026. Consent fatigue is real. You may see more OTP requests than before. Read them and don't approve access for institutions you don't recognize. It doesn't remove an institution's duty to know its customer. Faster verification isn't a replacement for genuine risk checks. Banks can still ask for more when needed. And since this is a centralized registry holding identity data at massive scale, it's worth staying alert about where and how often you're approving access, even with strong encryption in place. A central KYC registry has existed since 2016, but poor data quality made banks stop trusting it. CKYC 2.0 fixes this with real time APIs, a confidence score per record, OTP based consent, and AI deduplication. Rolling out from around August 1st, 2026, banks and insurers first, mutual funds and brokers later. You can check your existing 14-digit number right now. Missed call to 7799 022129 or via ckycindia.in. If your KYC details are outdated anywhere, get them updated now. A clean record is what makes this work in your favor from day one. That's CKYC 2.01 identity record, backed by a trust score, shared securely and only with your permission. If this helped, hit like, subscribe for more breakdowns of India's financial infrastructure changes, and drop a comment. Did you already know your CKYC number before this video? Thanks for watching, and I'll see you in the next one.